Hey, FreightWaves Now, friends and fans, ladies and gentlemen, welcome to Wednesday edition of FreightWaves Now. We're coming live to you, and it's an exciting day. We've got Nick Austin back in black. We have got the market expert Mike Intermodal O'Brien telling us about what is happening with those rates and that situation there and what to negotiate. And we're making an inaugural appearance. Kevin Carrier Lists Hill is going to be joining us too with some of his interesting data that they have been seeing, never before published or released. So we're going to get a little sneak peek at that. So hello, Chief Meteorologist, how you doing?
Chad, I'm doing good. And
Good.
yourself, sir?
I'm fantastic because there's not as much disruptive weather, much to your chagrin.
I tell you, we're starting to get into that time of the year where the winter weather will be less frequent. So we don't have any areas of significant winter weather, snowfall, or anything like that. Not even any large-scale big wind events happening today. So that's the good news. But there is one area of concern, and that's over Texas today. So we could see some severe storms across Texas, Austin, Texas, over towards some of the coastal areas like Houston later today, mainly later in the afternoon and into the evening. So that's what we have to watch out for across portions of the I-10 and the I-20 corridors. Now, Houston is one of those markets that's had a big drop in the outbound volumes over the past couple of weeks, but it's still a big market. So there's still gonna be a lot of trucks moving through there, a lot of drivers going through that area. So they need to watch out. You know, they could hit sudden wind gusts that could kind of make them lose control, sudden downpours of heavy rain, and there could be some scattered spots where there'll be some large hail and maybe temporary roadblocks from flash flooding, so on secondary roads. So those are some of the problems that could happen around Austin, Houston, kind of edging up towards the Dallas area, although they probably won't get hit quite as hard. And then it'll move into Louisiana during the overnight hours. So that's the real only area of concern as far as any significant and concerning weather today.
Well, stormy weather over our largest continental state in the U.S. Thank you, Nick.
You bet.
Thanks for that update. Appreciate that. And now we have market expert Mike O'Brien telling us what's happening with intermodal volumes.
Hey, once again, we're out west in LA, where the outbound tender volume is well up year over year. And then we're also kind of looking at truck rates or spot rates. They're falling, as well as intermodal spot rates. They're falling as well. And that's actually a new index for us. We got several, over 100 lanes of intermodal spot. They do include fuel and accessorials and all that, but it gives us a good barometer of what's happening in the markets. So you can see truckload providers or truckers and intermodal guys are doing whatever they have to do to move the equipment and keep utilization, while volumes staying relatively flat to slightly down.
And tell us what the purple one, the RTOIC is.
That's the volume of containers moving in the United States. So you can see it's flattening out or trending slightly down.
Okay.
So that's telling us there's a lot of volume coming out of there, but it's not so much on the trains, and the trucks are fighting to get their trucks out. So it's a unique market, but it's not all bad. And as we go to the next slide, we see this is the Cass Intermodal Price Index. And some people would say, Mike, you're comparing apples to oranges because we got the DAT spot rates for truck, and we're talking intermodal and spot rates for truck, but sometimes I'm kind of weird like that. It just shows you how loose the market is. But intermodal rates have risen. They're at their all-time high. And people are like, why are they at their all-time high if volume's down? That tells me they're not worried. They'll take a short-term dip in volume to keep their rates. They've worked hard to get those rates up there over the years, and they're not going to let a short-term dip in volume panic them into bringing their rates down, which is very smart.
There's obviously a relationship between intermodal and trucking rates. How is this playing? How are they playing out against each other right now?
On the spot, they're rising and falling together, mostly falling in most markets. Okay. So it just shows that the market's still loose, but they're doing everything they can to hang on to those rates they've worked so hard to get up over the years. They're like 6% up year over year.
And how realistic is that they'll be able to maintain them?
It's realistic. If they're banking on things to turn around, and and when the volume picks up, they've got the rates in place to make money.
So, and volumes are remaining somewhat steady and high, right? Or
Well, they're steady to slightly down. We're waiting on the next index to update right now.
Okay. All right. Well, thank you, Mike, all right, for that analysis of what's happening with Intermodal. And now, Kevin Hill, welcome to the show, your inaugural appearance.
Thanks very much, Chad.
Yeah, great to have you on. What have you got up your sleeve for us?
Well, we've been surveying the market, and we found that 70% of carriers are expecting diesel prices to be higher in 2019 than they were in 2018, right? You take that with line haul rates that are sliding, and their margins are really compressing. So they're concerned about that, and they're going to be negotiating rates and fuel surcharges off that information.
So far as we've been tracking it, I talked to John Kingston about oil on a weekly basis, and it seems like surprisingly, diesel has been very normal and stable. And he likes to say, if a market can't go on forever, it won't. And so are you saying that this pressure, we might be starting to see a rise in diesel as well?
We're going to see a rise in diesel, just seasonality, right? The summer
Yeah,
driving
right.
season, but as far as it compares to 2018, there's a few risks in the market. The Iranian issues, right, with oil exports, as well as Venezuela, a couple other global and geopolitical type of instances. But here we see it's tracking pretty well. Diesel's in the green, and then crude spot price is the mountain blue below, and it's trending very well. If we look at the next slide, here we have diesel spot rates. Or diesel prices and van spot rates, and we see as spot rates are trending downward, diesel prices are trending upward, which again just compresses the margin of carriers. So you'll expect carriers to dig in their heels whenever you're negotiating spot pricing, which is a lot of times all-in pricing. So you're not really talking about fuel, but that's something that's going to be in the back of their mind going forward in 2019.
We see them at times do what they did, I guess, a year ago and go in opposite directions.
That is right.
And so what are we expecting coming up here?
We're expecting that the line haul rates are probably going to be pretty steady. I don't see anything in the future that is really going to give them a pop. We could have a really good summer season of construction, and maybe if energy prices go up, you'll see you'll see an oil boom. But right now we're going to see probably pretty steady rates and diesel prices that I can't predict the future, but should be at least on par with 2018.
Okay, awesome. Well, thank you. And I appreciate that, making your inaugural appearance. Great information. And you have one more for us up your sleeve.
Oh, yeah.
Working with the tree
just one
map.
more, right? Yeah, a
Okay.
little tree map here of miles per gallon. So it gives you, fuel economy by tractors and trucks, and you'll see the markets with the best fuel economy, right? 9.72 miles per gallon in Macon, Georgia, Winchester, Savannah, on down here to Knoxville actually logs the least at 4.5 miles per gallon. So you have Fort Worth was down pretty well, 20% yesterday, maybe because of weather. So that's the tree map, and if you visualize this in a map version, you can see what areas that, whether you're on the broker side or the carrier side, where fuel will play the most important roles, where the darker blue is the better, or the fuel more miles per gallon that trucks are churning, and the whites or the lighter colors are the worst. You see Laredo's pretty bad. I think it's about 5 miles per gallon compared to some places in the Northwest and the Midwest that are around 7 miles per gallon. So.
My guess would be that miles per gallon has to do not only with geography but also congestion. What are there other factors that are playing in? I guess wind.
Wind, weather, right?
Okay.
Accidents, of course.
So why would these? So white is bad in this case, right?
Lighter colors are bad. Yeah.
Yeah. So I'm just curious. I wonder why. Maybe where there aren't hills or
True.
or congestion.
Yeah, like Nevada Reno, is a lower miles per gallon than the national average, which is kind of strange. LA I can see, right? Laredo I can see too, there's a lot of congestion. There's South Florida, okay.
I guess I would imagine Montana would be wide open.
Yeah, no, just cruise on through, right? The Dakotas, right? There's parts of, right here you think of congestion in this area, but it's the fuel economy is pretty good.
Somehow they're driving fairly efficiently out there.
So
who knows what could happen? Thanks to our market experts today here on Wednesday, bringing it to you what is happening right now. Yes, we got a little crude, bringing to you all things oil and what is happening. It seems like there's some things are stabilizing a little bit, but I think everyone's anticipating the seasonality uptick and maybe maintaining the hard-won negotiated rates that on either side of the aisle, whether it's intermodal or with the spot prices in trucking. So thanks for tuning in. If you want to check out what we can bring to you with our information on our Sonar SaaS platform, don't hesitate to ask. And also, of course, at Transparency 19 coming right up, May 6th through the 8th, we will give you live demos on how to use this awesome data, this powerful data, and what it can mean for you and your business and how you can run it more efficiently. It's a whole new world. It's a revolution happening right now with the innovation in the freight tech industry. Thanks for tuning in each and every day. We're here at 4 p.m. Eastern Time every business day. And check us out, spread the love on social media. We'd love to see you there. And you can, of course, find us on FreightWaves.com. In the meantime, don't worry, be happy.